Good evening and welcome to Traders Group. First of all, I'd just like to apologise if you received a link late. It was because I need to keep my eye on programming the reminders, and I didn't obviously keep my eye on it. I picked it up in the last 5 minutes just before before I logged in. So as I'm explaining, Brian, it is something that I need to do and program, and I'll make sure it's all programmed in for the next months ahead. And you would have received a link just late. In the future, you can use any link. It doesn't matter. The link doesn't change week to week, so any old link will work. Okay, let's get started by just examining, first of all, the S&P 500, looking at the strength of this market, and just making comments about where we believe the market is heading to in the not too distant future. My first comment would be, and we've got obviously lots happening in Australia and lots happening in the United States, is generally speaking, when we look at the US markets, they are fundamentally extremely strong. And any negativity which is produced by Mr. Trump, the president, is really being ignored by the market. And what we're seeing is a strongly upward trending market, which is very close to break into a new high. And this is something that which I haven't not said since the April low, that we're in a really strong bull market, and not participating in this market is a huge mistake, like a really big mistake. As this market moves and breaks into a new high in the not too distant future, we're talking, in the next pullback and the next expansion. I'm just going to slow down because Alan, who emailed me, has just entered the room. I might even start again. I apologize for this. He's just popping in. Okay, Alan, apologies for the late link. I forgot to program it in, and I'll make sure that's rectified. Just as an aside for the two guys that just popped in, you can use any old link. The link never changes. So my comments were based around the S&P 500 and the strength of the S&P 500. And the fact is that any negativity you see from the White House is completely being ignored by the markets and is overwhelmed by the strength of the US market. The US market is about to break into a new high, and there is a body of thought that a lot of money waits for that new high to be attained before they throw money at this market. So as this market breaks into a new high, we might see an acceleration of what's happening on screen. I do make note that the market since April has been rather high in its historical volatility. What do I mean by that? The pullbacks are very deep. There was a deep pullback in April, there was a deep pullback in May, there was a deep pullback in July, and you would note the last two pullbacks didn't really fall that far and seem to have found support at the upward moving 20-period moving average. So I'm suggesting that as we break into a new high in the next 2 weeks, we might see a lot of new money come into this market. And I'm very aware it's August, and August, September is that point where we see topping behavior, but that's markets of past. Seasonal trends that we may have observed in the past do not have to carry forward into the future. Therefore, just because something tops out and falls in October in past years, don't adjust your portfolio, in the context of something that actually hasn't happened. It's like saying I can read the future. It's all about, as you know, I hammer this point, it's all about the present. And the present is strongly upward moving markets with zero indication of distribution on screen. Very interestingly, I'm talking about my personal portfolio, has grown at a rate of price in value, which is basically unprecedented for the last 5 years. Last time I looked, I think I'm approaching 8.6% since the beginning of this financial year. How can that possibly be when the ASX has only grown 2, and this, I don't know what percentage this has grown, you can work it out. It's due to positioning and a little bit of luck. I had a stock that grew 28% yesterday, which was in Australia. So that's a little bit of luck. But my point is, irrespective of what I see at an index level or a sector level, the stock portfolio that I've positioned, and I'm just talking to investors, is positioned for maximum growth. And so far, in the last 6 weeks, it's been breathtaking. But it tells me that the market's about to keep on going in a rather big way. The leaders of the market usually are the first trains to leave the station, and the rest of the market follows. So I'll keep on singing from my song sheet. That is the one of bullishness and unprecedented growth. And this is where a lot of money is made. So if you're not in the markets, you are missing out. And I don't mean to say that to punish anyone. I'm just saying it. You all know I've said this constantly since the lows in April. And there's a lot to be gained by being in this market. So if we look at this current market, what supports an ongoing viewpoint that this market is not stopping and continues on? Well, the elements that I look at are other global indices and the VIX, and in particular other, near related indices. First of all, S&P 500. From the perspective of institutional volume behavior, it has grown in the past week. There's been an acceleration of strength and an acceleration of price. In the context of internal numbers advancing and declining, there's been an acceleration of advancing stocks and a deceleration of declining stocks. In the last 3 weeks, we've had advancing, 266 advancing, last week 254, this week 267 advancing. So that's an upward trend. In terms of declining, we've got 3 weeks ago, 218 declining, 230 last week, and 217 this week. So it's this decline in, this a lessening of declining stocks and increase in advancing stocks, numerically speaking. Then there's the other dimension. It's the volume of the advancing and declining. Last week, as that market had a little bit of a pullback, the advancing volume was only 1% above declining volume. This week it's 11%. So it's growing. I've seen it as great as 30% 3 weeks ago. The point is there's no internal evidence to suggest that this market is doing anything but expanding. Whether I look at it from volume, advancing and declinings, or new high and new lows, this week there was 26 new highs, 4 new lows. Last week 19 and 5. The week before that 23 and 3. So again, I'm looking for evidence to tell me that I should trim my sails, and there is no evidence. There's just a message in the box. I just need to read it. Okay, Alan's just having some fun with the Australian guys in Canberra. We'll deal with that in a moment. I'll read Alan's comment. He says, "You're talking about USA, not the Aussie market, with the government instability within Canberra." We'll have a chat about that very shortly. I just stick with US at the moment, and you're quite right. And it was interesting to see I think it was your deputy prime minister from New Zealand was here on Monday. So I don't know how they keep a straight face, but I'm sure the politics in New Zealand can't be any different to the politics in Australia. It's a fight for survival. And that's what it appears to be happening at the moment. I don't want to get all political. We'll get back to, but we will cover that point in a moment. So let's just have a look at other indices that are of great interest to me. This is not of super interest, but I do know when I look at the mid-cap indices in the United States, we have been tracking their evolution within a triangle. I was of the view that that triangle would have broken to the downside on that trend line before it broke to the upside, but it's broken out. It's a continuation pattern with a sign of strength pattern-wise. That pattern is supported by a fairly significant increase in institutional volume, positive buying behavior, which supports an ongoing break. What probably will happen is often the market comes back and visits the top of the triangle before it continues on, and it is getting already extended to the upside. When I say extended, I mean the market in relation to the moving average. We all am aware that markets cannot move at such rates of changes in price and then they revert to their average. So maybe a couple more days up, and then a pullback back to the average would be in order for IWM. Looking at other global indices, although, yeah, let me look at the other global indices. I'll come to the VIX in a moment. Most importantly, I like to study EWG, which gives me a sense of Europe. EWG has been looking fairly grim. It appears to be potentially doing a double bottom in the form of a W pattern. That is not complete, obviously, and I think EWG and anything in Germany or Central Europe reflects the trade adjustments between Europe and the United States. In a broader sense, looking at the DAX index itself, it appears also to be a double bottom. I've drawn in what I think may happen, and I'm now going to clean up this chart just a little bit, get rid of all the Fibonacci ratios, but we are aware that that pullback was still 0.618 of its range to the upside. So nothing unusual. It looks like it's another accumulation phase occurring, but it's a low growth Europe at the moment, going sideways since March. Coming across to FXI, FXI being the exchange traded fund, representing mid-cap stocks or large-cap stocks in China. And I drew this in sort of ugly looking inverted head shoulders pattern in the past few weeks. I had it a bit deeper, but then I noticed as I was studying it today, there's quite a significant bounce. And most importantly, the bounce is residing above the declining moving average, which usually indicates a base is forming. So the issue with investing in China, accumulation phases take time. And if the left-hand side of the pattern took 6 weeks to form up, the right-hand side of the pattern is going to take 6 weeks up, 6 weeks to form. And I think I know where there's plenty quicker money to be found than waiting 6 weeks for China to form up a base. Coming across to the Shanghai Composite, this is all pretty important stuff because it has a huge impact on our market. And the huge impact on our market is connected to metals and mining. And metals and mining, along with China, is in decline. This is a pretty undefined, non-complete inverted head and shoulders pattern. I'm just drawing in what I think is going to happen. If it bounces from here, it still is going to be an inverted head and shoulders pattern. It has done a capitulation, maybe not as dramatic as other pictures on screen, but it also is going to take days, weeks, and months to complete. Therefore, if I was putting my money, and I'm talking from an investment perspective, I definitely would not be looking at sticking it within the Chinese market. We can relate the Chinese market to metals and mining, both US and Australia, because they're correlated. The Chinese market has an extremely high correlation to this, and we have noted in the past 2 weeks that XME and XMM broke their triangles. We'll have a look at them later, and they continue on down, and they will also have to go through accumulation phases. Therefore, where should you not have your money at the moment? I wouldn't have money in Chinese stocks, and I wouldn't have money within metals and mining just at this point in time, not for the next maybe a couple of months. There is easy money to be made than waiting for these things to develop. If you're in love with those areas of the market, be my guest. But I'm about making money the quickest I possibly can. I have a target in my head. I have a time frame in my head, and I'm slightly above where I think I should be in terms of achieving that, the numbers that I'm looking for. Coming back to the US markets, then I'll do our local market. I just want to have a look at the VIX. If our market was in trouble, if the VIX was in trouble, what we would see is a significant elevation in the VIX. There has been in the past few weeks a elevation. It was due to the pullback, and as the market rallies, the VIX declines. There is no evidence whatsoever, other than these occasional spikes that occur at the bottom of counter trends, that this market's doing anything but going up, VIX going down. So there is no fear, no pronounced fear in this market that gives me any indication of any instability, which now feeds us over to our local market. First of all, let's look at EWA. EWA has been, and I drew an extended triangle today, trying to pick up, the tops and the lows and it goes out for a hell of a long way, which seems kind of ridiculous. But what I do notice with EWA from a volume perspective is there's a lot of positive volume coming into this market. And I would hope that means that in the not too distant future, EWA starts to break. For EWA to break, we probably need metals and mining to bottom and our finance sector to bottom. I'll show you finance in a moment. Finance has been damaged in the last 2 to 3 days due to what's happening in Canberra. We'll discuss it shortly. Let's actually discuss our index right now. Just bring up XJO. We have studied XJO in the context of a triangular pattern, and if anyone had have predicted that we would be back in the triangle after that break from last week, I would be very surprised. So what's going to happen? This whole 3-day move to the downside is absolutely due to what's happening in Australian politics. And I was expecting our Prime Minister, along with probably lots of other people, to just resign. And I believe if he did, the market would have bounced. If you're watching the news, you know it's shifted from a fist fight. Now it's going to be a knife fight with him looking for evidence to get rid of the challenger, Mr. Dutton. So this is very, very interesting. If Mr. Turnbull manages to stay in, this market could break down. The market is clearly saying they do not like him and they're selling it off. Who's selling it off? Fund managers are selling it off. I would love to think we're about to break to the upside if he goes to the meeting that they have to have tomorrow with their 46 signatures to petition him to have another spill motion, and he gets voted out. This market should have a tremendous rally, probably a really big rally tomorrow. The reverse will probably happen if somehow, I don't know how he can manage to stay with nearly all the ministers in his government resigning and even his best of friends saying it's time to move on. So I think eventually it takes time for people to accept the inevitable, because the only thing that will occur if he stays in is a really unstable government in Australia. And if he stays, it's not doing the right thing by the people. Of course, he has to show he's a tough guy by doing what he's doing in the last 24 hours or 12 hours. But I think ultimately he probably will step aside and the market will bounce. This market, this move to the downside has got nothing to do with what's happening in the Australian market. It is absolutely connected to what's happening on tally. And I can tell you that is because I regularly review the sectors within the Australian market. And I've had some extraordinary moving stocks in the past week. If you go through the sectors, I can tell you there is 8 out of 10 sectors in Australia that are either breaking into new highs or making some very significant moves to the upside. The reason the market went down is because there's one sector which is highly correlated to what's occurring in Canberra, which is finance. Metals and mining was already backing off, but finance has got hit in the last 2 days, and finance, the sector finance, represents a major percentage of our Australian market, hence you've seen this pullback. But if you just go through, I've been mentioning this every week, you look at every sector, healthcare going through the roof, information technology going crazy. In fact, I'll show you how crazy. This is brag time. This is one of the stocks in my portfolio from information tech. It went up 30% within the last 2 days. Obviously, good report came out. Good luck to that company. Good luck for my portfolio. But this is one of the reasons why some of these sectors are taking off. Healthcare strong. Information technology, incredible. Consumer discretionary, let it pop up on screen, looking fantastic, shallow pullback. Consumer staples, looking fantastic, little bit of a pullback. REITs, which is a division of finance, you'd expect some weakness, and there is. Industrials within Australia, just let it pop up, looking fantastic, only had a little pullback today. Now here we come to the ugly side of our market. Oh, sorry, I missed out on telecom has had a very large rally in the past 2 weeks, which I don't pay a lot of attention to. So why did the Australian market look so weak? Well, it's connected to finance. And if we look at finance, and this is not the Royal Commission, it has had a very deep pullback. This is the code XXJ, which is finance minus REITs, and it's fallen for 3 days solid. And it has fallen back to its downward sloping trend line back from October, November last year. Is there any problem with this? No, there's no problem with this because the pullback's explainable. If we didn't have an explanation, there's a problem. And it's done a pullback which represents 0.382 of its range up. There is nothing wrong with this pullback. If it does keep on falling though and goes below 0.618, that's your line in the sand. That's the line where permanent damage can be done, but it's not there yet. So this is just a normal pullback. And if things unfold tomorrow where we have a change of Prime Minister, this will bounce very, very sharply, and it's possibly an opportunity to add to your position if you've got things like CBA shares, which I have. I was watching CBA today, just give me one moment, and it did have a very ugly pullback at 1.57% and does look uglier than the overall chart. And it has quite worryingly pulled back to 0.618. So is that a failure? Not yet. Let's go one more day. I'm hoping things unfold as they should. We have a positive outcome in Canberra, whether you see it as positive or negative. I'm talking positive for the markets. That would be a change in Prime Minister. And this bounces really sharply. I can't tell you they have their meeting tomorrow, what probably should happen. I think it'll bounce really, really hard, is what I'm expecting, at least. And that would be true for all the banks. It doesn't matter. I don't really look at any other banks. I could flick up WBC, Westpac. They've all must have had a pretty sharp sell-off in the last day or so, and that is not unexpected. I want to go across at this point to a sector rotation chart. Just give me one moment. I need to shift it across to the screen, and I've got the wrong chart up. Give me one moment. My point being, with strength of the Australian market, it doesn't change because of the egos of politicians in our political system. In fact, when I look at a sector rotation chart, and if you ask me the question, what's weak or what's strong, what percentage is strong, I think 9 out of 10 sectors in Australia I would rate as strong. It's a really strong market. And check out XHJ. See this right rotation? If you haven't got exposure to XHJ, healthcare stocks, there's the big money. And that's true, I think, for the US as well. That is a really super duper. We've talked about this many times. If it goes to the right but continually does right rotations, it is signaling extreme strength. The only weakness on this screen is materials, which are driven by metals and mining. And I think I told you 2 weeks ago, I'm out of all metals and mining. Why? Because it's going to take weeks for them to bottom out and repair. In fact, why don't we go look at some metals and mining charts right now? So you can put your eye against that chart and you can see what I'm talking about. Just give me one moment. Okay, I'll bring up XMM. This is XMM ASX, and we're well aware that this was in a triangle pattern, and she broke 2 weeks ago. As it started to poke its head beneath, I gave in to my metals and mining stocks, both US and Australia, and I'm out. Now, why is it not a place to be in the near future? First of all, could that be the low? Of course it can be the low, but this has broken trend. The moving average is in decline, and what should happen in this instance is, if we look at this as a capitulation, which it is, and a repair, which it may do, and a shoulder, right-hand shoulder, which it probably will do, how long do you think that's going to take? It's going to take about 2 months to repair itself before it breaks up. Therefore, my rationale for shifting money I literally shifted it from metals and mining into healthcare exactly at the right time. As that broke, healthcare broke to the upside, and I got my timing perfect for a rebalance. So XMM, I'm not saying it's going down forever. It's going down in alignment with the Chinese market. It will bottom at some time. I made that picture up on screen. It could go down a bit more. As it bottoms out, Chinese market will bottom out at the same time, but they will both take a long time to finish their accumulation and track to the upside. If we come along, we might as well have a look at XME. XME has done a severe break and a severe capitulation last week. And again, I just made this picture up. But even if it turns out to be a symmetrical picture, there's still another 4 weeks of rise and then another 4 weeks of right shoulder. This is not where the money is. The money is in the shares that are breaking strongly to the upside, and that would be true for shares that you're looking for trading. Look for shares and opportunity in the strongest sectors of the market, and it is not to the upside XME or XMM at this point in time. I can break it down into individual stocks, but that's kind of pointless. I mean, we can have a look at Rio and stuff like that, but I think you'll find that not all of them. I don't think BHP had a big break, but Rio also has had this huge capitulation. It'll have a huge long-term recovery, which is, again, repeating myself, in alignment with what should happen in the Chinese market. And again, the Chinese market and the European market are adjusting to what's been happening all this year with Trump. They've lost, he won, basically. Okay, just zooming back to a sector rotation chart and just confirming my comments that we have one of the strongest sector pictures that I've seen in a long time. That's why I'm fully exposed to Australia, irrespective of what happens with Turnbull. I'm fully exposed to the market, and if he's not out tomorrow, he'll be out in a couple of weeks. So I'm not getting out of the market because of what some guy in Canberra is doing. So let's compare and contrast the Australian market to our US market. And I just need to turn some things off because it's a little bit crowded on screen. I don't need to put gold on because it's not a sector. And I don't really need to put, I'll leave oil, which is USO. Okay, let me read this chart. The United States is looking extremely strong. There has been some sectors that have lost a little bit of momentum, but that just refers to a counter trends within financial markets. There have been sectors which I probably shouldn't have held. I stayed in some areas of finance, which I shouldn't have done, but they're about to break and they're looking really strong. I've continually pointed out in the US market, one of the most significant opportunities is healthcare. Why? I got no idea. You can tell me. All I could tell you is that sector is about to and is already going through the roof. How do I know that? Well, I'll go down to the sector chart for the US market and just zero in specifically on healthcare. Just give me one moment. And we should see it going through the roof. And guess what? It is going through the roof. It is an insanely high momentum chart. Now, all the exposure I have to that particular sector maybe not be perfect. I don't really need it to be perfect. If I'm mostly perfect, I'm taking advantage of what's happening. I don't mind showing you the shares I've got. I've got this one, GTHX. It's not going gangbusters, but it's looking okay. I think I've shown you this anyway last week. BGNE, it's not going anywhere, but I'm going to hold it. It's done a double bottom. PTCT, looking great, steady growth to the upside, and ILMN is going through the roof. So very happy with that exposure. That should accelerate, and not unhappy at all. Coming back to the sector rotation chart, what's bad about the US market? Well, just as globally healthcare is going great, which is unusual, because you don't have to have correlated sectors between different economic regions. It just happens to be so at the moment. That's a little bit unusual. But if we come across to XME as a global commodity, so you'd think that would be correlated, and it is. Opportunities which are about to present themselves in the United States are XLI hasn't taken off yet. XLF hasn't taken off yet. And this would be no different to what I was saying about consumer staples many, many weeks ago. I was pointing out that it's starting to rotate. It did 2 data points to the right. As soon as you see, in fact, these are not ready yet. As soon as you see 2 data points to the right, it should attract your attention, and that's your point at which it make you move. So this is looking a really strong chart. I also note USO, that's Texas Light Crude, is doing a right rotation, and it is right translated, meaning it is probably going to make a big move. What's horrible, in addition to XME on this chart, is XTL. XTL is about to go into the weakened quadrant, which tells me already you shouldn't have any exposure to XTL. 2 strong sectors which have lost a little bit of momentum, that is consumer discretionary and tech, look like, don't interpret these charts. They're pointing down as weak charts. It says loss of momentum. That's all it says. If we had a look at both of these charts, which we will right now, let's go have a look at them. Okay, so XLY, all that chart represents is the loss of momentum in the triangle. And look what's happening. It's about to break out of a continuation pattern. That's and you'll see that do a right rotation on the chart. XLK, tech. Again, I could have drawn just give me one moment. All that's happened in this chart is it has slowed down. Let me draw a triangle pattern. That's pretty damn crude. It's more of a, there is another term for it. Alan, you've probably got the term, truncated something or another. It is, let's just deal with it as a triangle. Hasn't broken to the upside. It is still going up. It's just lost a little momentum in the past few weeks. So when I look at the US chart, it is again really strong. 6 out of 10 sectors in the United States are incredibly strong. 2 out of 10 are about to join the party, and 2 out of 10 are not good. So the only 2 sectors that you shouldn't be focused in on are materials sector, which includes metals and mining, and the telecom sector within the United States. The US picture is strengthening, not weakening. I can remember earlier this year, I was only down to about 3 or 4 sectors. It's now changing rapidly. It'll be 8 sectors in the next few weeks. It's looking great. Just give me one moment. I apologize. I need to look at my notes. So in terms of bragging rights, 2 weeks ago we saw that FB, that is Facebook, had a huge gap to the downside. I told you I was going to buy on the gap, and I did. Have I done the right thing? The answer is maybe not. It's done a retest, and if it keeps on going, I'm going to get rid of them at my entry point. But I still think it was well worth. I have no problem buying big gaps, especially if they're huge companies like this. They usually repair very quickly. This one hasn't, and I'll have to wait and see what happens. The other huge gap that I bought, which I wasn't sure whether I was doing the wrong thing, but Richard encouraged me, was COH. So between the two, COH, what a killer. I bought the gap on that, and the market's broken into a new high. So anyone that saw that on COH, I already own Cochlear, and I just added to my position. Now I've got a huge position, and I'm very, very happy with it, and just stick with it. So they're probably the really big movements, along with ALU, that I've seen in the past week. That's what I mean by luck. You only need a few big movers to add that extra bit of yield, and it's one of the reasons why I'm above 8% at the moment within 6 weeks, which is kind of crazy. Don't know. If I annualize that, the number's silly, so I won't. Okay, so let's go over to other important aspects of markets that give us an insight into what's going. Currencies, commodities, and gold. First of all, let's go look at the Australian dollar. If anyone in the room's got large exposure to overseas currency, in particular US dollars, you want the Australian dollar to fall. The Australian dollar has been extremely weak, and it will probably, in my view, continue to fall, even though I'm drawing all these squiggly patterns on screen, trying to build a pattern. I do note It got down to 0.618. I was expecting it to do a 100% fall again, down to 71 cents. And at that bounce, on that bounce, it has been supported by modest volume in modest positive buying volumes by institutions, but it hasn't broken trend, it hasn't completed a pattern, and I'm not calling it a low. If metals and mining continue on down, the Aussie dollar usually follows along with the that contract, so I wouldn't be getting too excited about this. It could fall just as quickly. It's had this little rally, and it's all good if you are having an unhedged portfolio in US dollar terms. It has added a percentage of positive yield to your portfolio in the past 6 months, which is all good. If the FFXA, that is the Australian dollar, was theoretically bottoming, you'd expect theoretically the US dollar pair on the Sydney Securities Exchange to be putting in a top. And I see zero evidence of this particular contract putting in a top. It has come back. It is kind of revisiting its strongly upward moving trend line, but there is zero evidence of this breaking trend or anything of the such happening in the context of this chart, other than it's continuing to the upside. So I'll call a bottom on the Australian dollar when I see metals and mining bottom, this break trend. I see an official top, technically speaking. I see negative volume behavior kick into this market. Let me check that. The volume's backed off since last week, but nothing dramatic. It hasn't gone negative. It's fine. Just give me one moment, just checking. It is negative, but it would have to be negative on that trend line and break through. And that hasn't occurred. Therefore, I cannot go negative on the US dollar, and I can't get too positive on the Australian dollar. It is as it has been for many days, weeks, and months. If the US dollar is still in an upward trend, which it is, obviously on screen, things that are negatively correlated would obviously be still in a downtrend. And the one thing that we note is the gold market, which is a commodity. And as we spoke about this last week, all commodities should be in a downtrend because most commodities, if not all commodities, are written in US dollars. If the US dollar is rising, it means the commodity becomes more expensive. Hence, generally, globally, they go down. And I go through all the commodities, and you should see them all tracking down. So there's no surprise to see gold going down. And when I look at the institutional volume behavior behind that activity, it is slightly positive because it's had a little rally, but overall the picture is one of great negativity. And in the future, if we were smart enough to pick the top of the US dollar against all other currencies, gold would probably be a really great buy. At the moment, it's nothing other than what we've been analysing in the past few weeks, and that is a contract which is in a strong downtrend, which broke out of a channel many, many weeks ago and continues to do downward moves on a daily chart. Oil has been very confusing. I still do not have any exposure to oil. To be honest, I don't care. You don't have to be in every area of the market. Just give me one moment. First of all, USO. Coming to a daily chart, I make note on the sector rotation chart, the potential for USO to do a right rotation. What that tells me is that it could be, and probably is, about to have another rally. I make note that the market did not break trend. I also note that the volume behavior has not improved. It was really weak last week, and I thought negative volume on the trend line means it'll break through. So I can't really get too excited about this at this point, but what it looks like, I'll tell you next week. What it looks like is something what I've called this before. It's called a three-wave structure, and I would suggest that this is a low once it breaks its previous swing high. It's got a little bit to go. So is this probably going to maintain its trend? It kind of looks like it is, which means XLE, the broader contract, should also be looking at forming a base and showing some sort of strength. XLE last week, we had drawn it into a triangle, and that triangle was breached as of last week. It has done a strong rally, and that strong rally could be the bottom of an inverted head and shoulders pattern. These triangle patterns and these inverted head and shoulders patterns are everywhere in the markets at the moment. So in the next few weeks, if this ends up to be a pattern which is putting in some form of accumulation phase, it would be an opportunity. But I go back to what are the strongest sectors in the market: healthcare, tech, consumer discretionary. There are easier places to make money than waiting for these XLEs and the USOs and other contracts, XMEs, to form bases and track to the upside. So I truly believe that it's interesting, but it's not where the action is at this point in time. Just give me one moment. I'm just checking out some information on my screen. I've been waiting. I keep on mentioning this, but Robo, which is robotics, I was really keen on this last year, and I have lost all interest in it. But I still keep on looking at it because it is a future which has not unfolded. Unfortunately, since earlier this year, it's faded and hasn't returned. When that starts to break trend, I see some excitement within this particular sector of the market, or it's a subsector of industrials. I'll get excited about it. I'm still going to keep an eye on it. What will happen here is someone will announce some revolution, some innovation, and it'll all be on again, and everyone will be leaping into robotics and artificial intelligence again. It just has lost a little bit of oomph, for want of a better word, and it will come back though. If you've got any questions on specific stocks and you want me to have a look at them, now would be a great time to type in those codes while I review my notes on the screen. I'm just looking at just in revision, I'm looking at my sector rotation notes. So there's only one bad sector in the Australia, that's XMM, or materials, and I've already mentioned it. 2 sectors in the US. I've already mentioned everything I'm reading. I'm just reading it in words. With the developing sectors, XLI and XLF. XLI, I haven't got any exposure to. I may have a look at that in the next week or so. Just give me one moment. I'm just going back to my pad last week, making sure I haven't missed anything. Okay, Brian's just put in a code ANN-ASX. Just give me one moment. I'm just going to give it just type it in. Okay, ANN is Ansell, and just wait for the picture to pop up. It's just loading up. You've got a black screen. I also have a black screen. It looks like it's had a fairly steep decline in the context. It's a big gap. If you had the risk appetite that I have, you'd go buy this, and maybe I might do this tomorrow, Brian. Ansell is in pharmaceutical products, and I mean, the gap represents a bad report that they've put out in the past week. It doesn't mean fundamentally the company's bad. So Alan just typed in that reporting season might have missed expectation. You know, this missing of expectation does not, I'm repeating myself, doesn't flow into the fundamental nature of the company. They may have said they were going to get X cents per share and were 2 cents below what their guidance numbers, and everyone reacts irrationally and sells it off. Just like I showed you with COH, doesn't make sense. To me, in a strong bull market, these all just represent buying opportunities to me. Will it be as good as COH? Maybe, maybe not. I can't see the future. It could be like FB, where it goes up a little bit and retests. Depends on what you're doing with it. If you're trading it, I wouldn't be buying it as a trader, because as a trader, if you're doing options, you need the market to make pretty secure, fast directional moves, and that is not guaranteed with a gap. If you're buying it as a part of a diversified portfolio, completely different. Because if you're wrong, it doesn't have a big impact on anything. If you're right, okay, it adds some extra meat or yield to your overall portfolio. So what you do with it is dependent on what your intent is. Just give me one moment. I'm just going through my notes. Just want to come back to finish off with a summary of the S&P 500. Just going to blow up the picture a bit. S&P 500 is obviously on a little bit of a rally at the moment, and that rally is nearly equal to the previous rally. Therefore, it'll probably go up for a few more nights, get to a point where it does a pull back to its average. This market is interesting in the fact that it isn't doing deep pullbacks, or it hasn't done, since early August. I'm not predicting anything because it could be just a momentary point in time, but these really shallow pullbacks occurred in from middle last year to early this year, and it was a period of extreme growth with very shallow pullbacks. Are we coming into a period where the market has been extremely volatile, which is what you expect in accumulation phases, to a period of non-volatility? The answer is probably yeah. That's what happens. Markets go from high to low historical volatility. We could observe that, and I'm doing this off the cuff. Just give me one moment. I just want to find a period because I want to find a really quite a volatile period. Yeah, probably no period of the market's exactly the same, but I'm just looking back in 2016, 2015, a period of extreme volatility, which is accumulation. And as the market goes up, you get big pullbacks to start with, but then as the market goes up, the pullbacks usually get shallower and shallower, and the market, if it's accelerating, moves away from the moving average, like over here. This is not a perfect example for it, but I think you know what I mean. So I'm trying to look slightly into the future. From June through to December this year, this is ultra low historical volatility, very strong market moves, very shallow pullbacks. And we have just gone from a period in April to June, decent sized pullbacks, but now the last two, just back to the moving average. That could go on for days, weeks, and months, or up until we get some seasonal volatility, which may not even happen. It does not have to occur. There's nothing negative on this planet at the moment for the US. It's all positive. So if it does happen, we'll see something. We'll see breaks of trend, and we'll see something occurring, which will give us an indication, or we'll see a blow off top. At the moment, just strong upward move. Just a comment from Brian. I'm just reading it. So Brian's just saying he believes that the S&P 500 statistical volatility is at 9.2. Is that high? Actually, from memory, that's low. I can't actually go check that, Brian, because my option view is actually something wrong with it, and I've just had to upload a new version of it tonight, but I need permission from the US, so I can't go and check that out. If you ask that same question next week, happy to recover it. Alan's saying Trump impeachment could blow it. Alan, I don't think anyone cares about Trump. Trump isn't them US markets. I think he's so saturated the media with his comments, no one's paying attention. Because if they were, what happened in the last 2 days would have significantly affected the market. So I really don't think a Trump impeachment is going to have any effect. Fundamentally, the US market is ultra strong, and it's all because of got nothing to do with Trump. This was Obama and the Federal Reserve in the last 6 to 7 years. They set the foundation for this strong rate of growth that we're having. Trump's just come in at the tail end of all their hard work. Guys, I think that's it for this evening. I'm just going to start repeating myself. I appreciate your time, appreciate you turning up, and apologies once again for the low or the slow linkage that was sent out. I'll fix all that now, and it won't happen again. Thank you. Have a great evening, and I look forward to seeing you same time next week.